Hi everyone, welcome back to your weekly market update from G2 Financetech. The last week of June gave us a strong rally in equities, mixed signals on inflation, and a few global surprises worth keeping an eye on. Let's break it down. Starting with the United States. It was a record-breaking week on Wall Street. The S&P 500 surged 3.4% and the Nasdaq jumped over 4%, both hitting fresh all-time highs. Even the Dow and small and mid-cap indexes had solid gains. So what's behind the optimism? A few things. First, tensions in the Middle East cooled a bit. Then came dovish tones from Fed officials, adding a surprise trade agreement with China and hints of more deals coming soon. And markets had all the reasons to rally. But here is a nuance. Even though sentiment is strong, inflation is still simmering in the background. Let's talk about that. The Fed's preferred inflation gauge, the core PCE, ticked up slightly in May, up 0.2% month on month and 2.7% year on year. So, no shocker, but still sticky. The bigger surprise? Personal income and spending both fell when analysts expected them to rise. So, consumers might be starting to pull back. That's something we are watching closely at G2. Meanwhile, business activity held up. The June PMI came in at 52.8, a touch lower than May, but still showing growth. Manufacturing bounced back for the first time in months, even as services cooled. The real head turner? Durable goods orders spiked 16.4%, the biggest jump in 11 years, thanks to a surge in aircraft bookings. But housing? Still soft. New home sales fell nearly 14%, the lowest since October. On the policy front, the Fed didn't move rates as expected, but futures markets are slowly warming up to the idea of a cut as early as July. That helped push Treasury yields lower and gave bonds a nice boost for the week. So, what's our take at G2? We think the market's little ahead of itself on rate cut optimism. Yes, some data is soft, but inflation isn't done yet. It's going to be a wait and watch summer. Shifting to Europe, markets were up. The Stoxx 600 gained 1.3% and Germany's DAX climbed nearly 3% after Berlin pledged new stimulus and higher defense spending. But the data still shows a sluggish economy. Eurozone PMIs were stuck around 50, showing stagnation. France is still contracting and inflation picked up a bit in both France and Spain. Consumer confidence is slipping too, even though Germany's business sentiment hit a one-year high. Bank of England Governor Bailey was also in the spotlight, saying the UK economy has slack and that any rate cuts will be super gradual. Now, on to Japan. A strong week here. The Nikkei jumped over 4.5%. The Bank of Japan kept rates steady but emphasized a cautious approach to tapering its bond purchases. Inflation remains above target. Tokyo CPI was up 3.1% year on year, and there is a debate within the central bank about how fast to normalize policy. From our view, Japan continues to make a quiet but compelling case for global investors. Let's wrap with China. Markets were green here too. The CSI 300 and Shanghai Composite both gained nearly 2%, while Hong Kong's Hang Seng surged over 3%. The catalyst? A newly finalized trade agreement with the U.S., which promises cooperation on rare earths and other strategic sectors. Still, challenges persist. Home prices are falling again, and while retail sales looked solid, a lot of that was likely boosted by temporary stimulus. The property sector drag and weak private demand remain big concerns. So, what is the big picture this week from G2 Financetech? Markets are celebrating diplomacy and dovish tones, but beneath the surface, inflation is sticky, housing is fragile, and consumers are starting to feel the pinch. Global central banks are cautiously optimistic, and so are we. But we are staying selective, keeping one eye on policy and the other on earnings as we head into quarter 3. That's a wrap for this week's update. If you found this helpful, give us a follow, drop your thoughts in the comments, and tell us what's the one data point you are watching as we move into July. Thanks for tuning in. We'll catch you next week.